All right, guys, today's presentation is going to be called My Secret Weapon. It is the best technical indicator in the world, in my opinion. Up here to be your presenter today. My name is Andrew Keene. Past performance is not indicative of future results. Little risk disclaimer, we have to put this in every single webinar we do. Day trading, short-term trading, option trading, swaps, futures trading are extremely risky undertaking. They're generally not appropriate for someone with little capital, little to no trading experience, and low tolerance for risk. Never execute a trade unless you're willing to prepare to lose your entire investment. All trading involves serious risk. No trades are recommendations or advice. I am not a registered investment advisor. I cannot give recommendations or advice. If you guys have any questions about margin, execution, other capital requirements, call your broker. They'll know better than me. I'm not registered at all. I don't have any customer money. I just trade on my own trading account. This is my trading account. I trade through Thinkorswim currently. As you can see today, let me just get the pointer out here so I can look at my P&L for today. So today I had a really, really nice day trading. Basically, my book is divided into three separate categories. Number one is swing trading. So I swing trade unusual option activity. And you can see swing trading up $3,836. I have iron condor strategies where I sell premium in the weeklies. That I did lose $437. I lost it in Google. Then I have day trades. As we can see in day trades, up $1,571 for a grand total of $5,000 profit today. On Monday, I lost about $250. On Tuesday, I made about $400. And then today I made about $5,000. So I'm up about $5,400 this week. So I'm having a really, really good week. As you can see here, which is important too, I basically took off all my positions. When I noticed the S&P was up 30 handles, I thought it was overstretched to the upside. So I started laying back into a lot of my long positions. So I basically took off every single long position I had on. I came in long, as you can see, ADP, Disney, Dow, EL, FTNT, the RSX, Yum, and day trades were all longs as well. So I sold all my long positions today. So I'm back to really being flat this market. I'm short a little bit in Google here, but in general, I'm pretty flat. So this is me as a broke college student. It would kind of be a better story if I was this guy on the right. I'm actually not. This is me in the middle here. So when I started trading, I was really young. This is me at 21 years old. So this was in 2000. Okay, I was born in 79. So this is me in 2000. And basically, I started trading in 2003. So in 2003 is when I started to trade. Then in 2006, roughly, that's when I made my first million trading. I have the statements to actually prove it. I can actually see if I can find these really quickly for you guys. So, I traded on the trading floor. I was a market maker for a very long time. Let me just pull these up really quickly. I'm going to Google Doc. So these are all my statements throughout the years. Started in 2006. As you can see here, and this is before commissions or seat lease. Made $180,000 here in 2006. A couple things that are important here. My name is on here because it is my account. Another thing, Goldman Sachs, they were my clearing firm at the time. And then the date was 12/29/2006. If we kind of move on here to 2007, 2007 made $1.5 million. Once again, that's before commissions, seat lease. My name, as you can see, the date 12/28/2007 is the last day of the year. And then Goldman Sachs, once again, was my clearing firm. Then we fast forward to 2008, my best year ever trading, $3.4 million. And I was on an 80-20 deal. Once again, no commissions not included or seat lease. Last day of the year, 12/30. And then we go to 2009. 2009, basically probably after commissions, I might have actually lost money, $167,000. This is 12/30/2009. So I've had a pretty successful trading career, and now I'm here. All the trading on the trading floor basically went insolvent. So I'm here to teach you guys how to trade properly, more effectively, potentially make more money. Like I said, no trades or recommendations or advice. I'm not a registered investment advisor. So I've been trading for 14 years, more or less every day. I mean, not technically every single day, but I have been trading more or less every single day over the course of the last 14 years. And I started my company About 5 years ago. In the last 5 years, I've done close to 400 live webinars and never do them recorded. So about 500 webinars in the last 4 years. I've taught close to 50,000 students how to trade. I actively mostly trade equity options. I do trade stock a little bit, futures and forex, but my bread and butter is really trading equity options. I watch unusual option activity in the options market. So a little background about me. I studied at the University of Illinois Champaign-Urbana, and I actually studied in England as well. So I studied at Nottingham University in the UK for a little while. So I studied at Nottingham. Then I went down to the trading floor. I was one of the largest independent Apple traders in the world. Basically, you know, this was before iPhone, iPad, iTouch. And this is where I kind of learned, you know, how to trade. And when I left the trading floor, guys, to be completely honest, I wasn't really good at technical analysis. Technical analysis was really my downfall of everything. And I really needed to learn technical analysis. In 2006, I blew out my trading account. And what I did is I went to Thailand and I taught English in a Buddhist monastery for about 6 weeks. And that's where I learned the Ichimoku Cloud. I came back and I started applying it in all my teaching and all my trading. And then it really helped me out. Because when we were on the trading floor, I was trading more of implied volatility, supply demand curves. I wasn't really trading, you know, technical analysis at all. I'll be completely honest, you know, for a very long time, I didn't ever look at anything but implied volatility curves, okay? I never looked at, you know, anything else that most people find really important, which is basically technical analysis. So, you know, there's a story back in baseball with, you know, Carlos Delgado. He came up, he's a left-handed hitter for the Toronto Blue Jays, and he was, you know, killing it. And then they realized he didn't know how to hit a curveball. So what did they obviously do? They started throwing him curveballs. And that's how I was. I was very good at feel of the market. I was very good at, you know, moving in and out of positions, knowing to when to get out into positions, when to get out of positions. But the one thing I didn't have was technical analysis. So I started going through, you know, looking at all moving averages, the 50, the 150, when they cross each other, RSI, relative strength index, you know, Bollinger Bands, and nothing really stuck out to me. Then I ran into something called the Ichimoku Cloud, and I said, hey, this is pretty cool. I really like this Ichimoku Cloud thing, right? So I started trading with the Ichimoku Cloud, and it really started to help my proving. So I'm not here to, you know, sell you something called the Ichimoku Cloud. What I'm here to do is help you with your trading, and hopefully you can use technical analysis and start using the Ichimoku Cloud immediately. I'm going to bring up Thinkorswim here because I know a lot of my subscribers trade on Thinkorswim, and I'm going to show you how to institute the Ichimoku Cloud. So if we go in here, let's just put Lulu in for argument's sake. So here in Lulu, okay, stock gapped after hours too. We got up to 66. Okay, so let me just remove this. So let me get rid of ATR, RSI, and apply. Okay. Okay, let's go in a different side. Let's go into letter X. Okay, so I'm in the letter X here, and I have to remove the Ichimoku Cloud because I want to show you guys how to put it on, how to put in the Ichimoku Cloud. Okay, apply. Okay, so here's the chart. And you're like, wow, it looks really great. You know, oh, it's a good looking chart. You know, this, as we can see here, was stuck in a range between, you know, 15, maybe 16 to 25. Then it broke to the upside. Okay. Well, besides that, what else is important? Okay. So one thing I like to use, and you guys can get it for free on NinjaTrader, Thinkorswim, TradeStation, a lot of different platforms where you can get this free. It's called the Ichimoku Cloud. So what does I do is I go in here, I hit this little hourglass. Okay, so see this little hourglass? I hit the hourglass. Then I go to the left and I put in Ichimoku Cloud. So I go to Ichimoku and I double click. Boom, boom. Okay. Hit OK. Okay. So now the Ichimoku Cloud is up. Okay. Once I have the Ichimoku Cloud up, I particularly like to do certain colors of my Ichimoku Cloud. So what I can do is I can double click anywhere on the cloud. Okay, so I just double click the cloud. And then this is all the colors. So we're going to teach you guys how to use the cloud, trade setups, what time frame you should use it for, basically the who, what, when, where, why of the Ichimoku Cloud. But one thing I want to do is set up the color scheme. So I'm going to go in here, and I'm just going to go across, and I'm going to go to 5 across all of them. So 5, 5, 5, 5, and 5. Okay. Now, I particularly like to get certain colors. You guys can kind of use whatever color you want. So the Tenkin sign, I like to make a pink, Cajun, a green, Senku Span A peach, Senku Span B, a red. I can do a pink again. Make sure that's right. No, Span B is a green. And then Kenku, I like to do a blue. All these actually translate from Japanese. Okay, so all these mean something in Japanese. Then what I want to do is I want to hit apply. So watch the cloud, guys. See how it looks now? I want to hit apply. Okay. So let me hit apply. Okay. Okay. So now I have the Ichimoku Cloud. You know, basically, letter X is a buy on any pullback. It has gone parabolic higher. So anytime it hits the 9 line, 9 period moving average, like here or here, then I could buy it with a stop under the 26. So there's 4 different kinds of traders, and you guys got to figure out what kind of trader you are. Let me see if I can put this in white. So the 4 types of trader is there's an aggressive pullback. It's hard to write in this. Okay, so you can be an aggressive pullback trader. You can be a mild pullback trader. You can be a counter trend. Okay, and then you can be a breakout trader. And I consider myself a breakout trader. Okay, so these are basically the 4 different kinds of traders you can be. And in the course we're going to offer you guys at the end, you will learn how to trade each one of these approaches. Okay, every single person here today, I can't tell you what kind of trader you are. I can't tell you you're a breakout trader if you're not. Everybody has different risk tolerances. Everybody has different reward to risk setups. Okay, you got to figure out what you are. Okay, so kind of think of it. Maybe close your eyes for a minute and think about what kind of trader are you. Are you an aggressive pullback trader? Are you a moderate pullback trader? Are you a counter trend trader? You know, you're trying to short this market as it goes higher, or you're a breakout trader. I know if I had to choose one of those, I most likely am a breakout trader. So here we have it. So, you know, for each trader here, the breakout trader would have bought the breakout in letter X to the upside at $25. Stop would have been at 16, and you would have hit all those targets to the upside. So that would have been a really, really nice trade. Okay, the aggressive pullback trader, okay, would buy every pullback in the 9 period moving average and put your stop under 26. So that would have got 2 winners there. The moderate pullback trader hasn't had any signals yet. Okay, counter trend trader, that hasn't set up either. That'd be looking for a counter trend reversal pattern here, and it's not here. But every single one of these setups, guys, in the workshop we're going to offer you at the end, we will teach you how to trade these. Okay, so in these workshops, okay, we will teach you how to trade this, which is so important. Okay, so let me remove this now. So now I live in Austin, Texas. So I live in Austin here, and I grew up in Chicago, lived there my whole life. I moved to San Diego. I was in San Diego for 1.5 years. Now I moved to Austin. I'm actually moving to Dallas in 2 days. So you guys should think that you're getting a little treat here. Me doing a webinar, you know, when I'm moving in 2 days. I have a lot of stress going on with the move. But, you know, it's all good and stuff like that. So regular contributor on CNBC, Bloomberg, Fox Business, Sky Australia. You know, if you just go into CNBC.com and you put in Keene on the top, Okay. And we see, you know, these are all videos I've done. So I talked about Home Depot rallying. Okay. Did one today in Pfizer for CNBC. So I do a lot of different videos for CNBC. Basically, more or less, whenever they want me to do a video for them, I will do a video. Doing a video again for them tomorrow. At Floor Trader, I've been on Bloomberg, Fox Business, BNN Canada, Sky Australia is another one I've been on. So I've kind of been on more or less, you know, every kind of news outlet across the world. So I like doing TV every once in a while. I really don't like it as much as some people like it. And then I was a floor trader for 10 years. So we're going to talk about what the Ichimoku Cloud is, and we're going to talk about how is it constructed. So the Ichimoku Cloud is a technical analysis method that uses the past, present, and future to help traders identify at a single glance if a stock is bullish, bearish, or neutral. Okay. So within a second, I can look at a chart. I can say bullish, bearish, or neutral. Okay. Bullish, bearish, or neutral. Okay. Stocks above the cloud, as a generalization, it's bullish. In the cloud, neutral. Below the cloud, bearish. Ichimoku Kick and Hoy actually translates to one glance equilibrium bar chart. The cloud is made up of 6 components. Each of these we'll examine individually. When combined, these components construct the Ichimoku Cloud. So we see here, you know, if I brought up the cloud, okay, 6 components. Let's count them out kind of together and see what they are. I'm going to talk about the equations for them. You don't have to memorize the equations, but, you know, it's important to realize when trade setups. Kenku, Tankin, Cajun, Spawn A, Spawn B, and Chemo. So those are the 6 components of the cloud in a nutshell. If you guys want, we'll talk about how, you know, we'll talk about how these are constructed, talk about the mathematical equations. But the difference between this and basically moving averages, because in moving averages, it doesn't work very well. Because if a stock goes from, you know, 30 to 40 to 30 in a day, as a generalization, you'd want to be, you know, long that stock always. Ichimoku Cloud shows me high and low. You know, if you're in a room right now and I'm sitting, where's the low? That is the floor. Where's the high? That is the ceiling. So, you know, that is support and resistance. Okay. Moving averages do not account a lot of different factors that are important. Okay. So the cloud is consistent of 6 things. Each of these we're going to examine today. On the next chart, we'll look at Bank of America. Okay. So we're going to talk about what the cloud is, different components of the cloud, using the cloud for support and resistance, the cloud and trend, and using the cloud for options. Okay, I'm an options trader. I used to use the cloud for options. So what is the cloud? The different components of the cloud, using the cloud as levels of support and resistance, the cloud and trend, and then using cloud for options. So here's a chart of Bank of America. You know, we just brought up the letter X, and this was one that we took, I think, from today. Okay, so what is important? Okay, we're clearly in a clear bull channel. Okay, so let me bring in my new color. Look at this bull channel. Why aren't we broke right here? Straight higher. I mean, parabolic higher. Okay, if I was a breakout trader, I would have bought the breakout to the cloud to the upside right here. That would have been a good trade. If I was a mild pullback trader, okay, an aggressive pullback trader, I would have bought every 9-period moving average, okay, with a stop under the 26. And every single one of these trades would have worked. So I would have 1, 2, 3, 4, 5, 6, 6 winners here, no losers. If I was a milder pullback trader, I would buy the red line, okay, with a stop in the cloud. So that would only have me 1 setup. And if I'm a counter trend trader, you know, I probably wouldn't have done anything here. This didn't make a new 52-week high, so that wasn't really a good trade there. So I probably wouldn't have taken any trades. So Ichimoku, using this, you know, helps you guys figure out if a security is bullish or bearish at single glance bar chart. Okay. So this is very, very important here when trading the Ichimoku Cloud. Ichimoku Cloud is trending product, so it works best in trending stocks. It doesn't work so well in trading range stocks. So it's much better in trending markets than it is trading range markets. Okay, just remember that, guys. Trending versus trading range. Trending versus trading range. Okay, there are 6 components of the Ichimoku Cloud. Tenkin sign, Cajun sign, Senku span A, Senku span B, Chemo, and the Kenku span. Each of these, we're going to show you guys the mathematical equation. You don't have to memorize them. You don't have to do much with them. All you have to know is when the possible trade setup is for your criteria. Okay, write them down, think about them. And I am mild pullback trader. Am I aggressive pullback trader? Am I a counter trend trader or am I a breakout trader? Depending what you individually are, there is a trade set up every single time for you. So these are all the components of the cloud. We're going to go over all the mathematical equations for them, and we're going to look at some more possible trade setups. So this is Bank of America. We have the Tenkin sign. Okay, Tenkin sign is the highest high plus the lowest low over the last 9 periods. Okay, what is a period? If you're trading on the daily charts, 9 days. Trading the 5-minute bar, it's 9 5-minute bars. So highest high, 1, 2, 3, 4, 5, 6, 7, 8, 9, plus the lowest low, okay, is a 50% Fibonacci retracement. Okay. For the Cajun sign, we have 3, 6, 9, 12, 15, 18, 19, 20, 21, 22, 23, 24, 25, 26. Okay. So it's going to be this number up here. Okay. 22, 23 plus this number divided by 2, which gives me the Cajun sign. Okay. These are very similar to short-term moving averages. Okay. Tenkin sign is very similar to a 9-period moving average. Cajun sign is very similar to a 26. So a 26-period moving average. Tenkin sign is very similar to a 10-period moving average. Cajun sign is very similar to a 30-period moving average. So if you want to compare them to moving averages, Tenkin sign is very similar to a 10-day. Okay, so let me write this down. This is similar to a 10-day moving average if you're trading on the daily, and this is similar to a 30-day. Okay, but this is the highest high plus the lowest low over 9 periods. This is 26 periods. And you might say to yourself, Andrew, what does this all mean? What's 9 and what's 26? Okay, Ichimoku Kinken Hoi is based on Japanese calendar. Back in the Japanese calendar, there used to be 6 days a week trading, 26 days in a month. So that sets me up with my short-term trend and my longer-term trend. Okay, I have never, ever I've never back tested it myself, but people have looked at back testing strategies to figure out, trends. Okay, does it work better on this, or should we move it to something a little bit more accurately, which is the 8 and 22? But I stick to the default setting. So if we go into that, we go in here and we look at the default setting, it will be set me up to that 9 and 26. So if I double click the cloud here, it sets me up right there. You guys see it's 9 and 26. So don't mess around with your settings here. Just use the default settings. Okay? Make sure you don't mess around with those. So let's go through the definitions real quick. So we have Tenkin sign. Tenkin sign is the highest high plus the lowest low. Okay? Highest high resistance plus the lowest low support over the last 9 periods divided by 2. This was based on daily charts initially, but you can use it on a 5-minute bar. And this shows me a week and a half of data. Okay, it shows me a week and a half of data. So highest high plus the lowest low over the last 9 periods divided by 2. highest high, lowest low, 9 periods divided by 2. Okay, this is very similar to a 10-period, 10-day moving average. Okay, very similar to a 10-day moving average. Cajun sign. Cajun sign is the highest high, which is resistance, plus the lowest low, divided by 2. So it gives me the exact 50% Fibonacci retracement over the last 26 periods. Compare this very similar to a 30-day moving average. Okay, highest high plus the lowest low over the last 26 periods. You guys don't have to memorize all these equations. I do because I want to know Ichimoku Kick and Hoya as well as possible, but you don't have to memorize these. Spawn A. Spawn A is the Tenkan sign. Okay, so we've looked at it here in Bank of America. Tenkan sign plus Cajun sign divided by 2. Okay, so it keeps you that 50% Fibonacci retracement plotted in the future. So there's 2 reasons why I love Ichimoku Kick and Hoya. Reason number 1, it is 100% free. You can download it on any platform for free. You don't have to pay at all. Number 2, it shows me past, present, and future. Past, present, and future. So we'll talk about the Kenku spawn. This is bullish. Past, bullish. Present, bullish. Future, future looks bright. It's like any relationship you are in this world, right? Any relationship, you want to say to yourself, let's say a relationship with a significant other. Say, hey, how is it currently right now? How is it in the past? And how do I think it's going to be in the future? Okay. How is it today? How was it in the past? How is it going to be in the future? Obviously, the best charts, just like, you know, the best relationships, you say it was great in the past. It's great right now. And I think it's going to be great in the future. Great. You have a great relationship. So this is the Tenkan sign plus the Cajun sign divided by 2, plotted in the future. Okay. This is how the cloud is constructed. So today's cloud was constructed from 26 periods ago. Okay. Today, the cloud in 26 periods was constructed from today. It's pretty simple when you actually think about it. Okay, and you get the recording so you can watch this as many times as you want. I'm just here to teach you it today. All right. Spawn B. Spawn B is a 50% retracement from the highest high plus the lowest low over the 52 periods. So once again, based on a daily chart, this would be, you know, an exact 50% retracement. Okay, highest high plus the lowest low over the last 52 periods divided by 2. So this is how the cloud is constructed. Okay, you know what's really important here, guys, is the thicker the cloud, the better the trade, the bigger the stop. I will repeat that. The thicker the cloud, the better the trade, the thicker the stop. Okay, so if I have a very, very thick chart, okay, if I have a very thick cloud, it's going to be a good setup, but it's also going to give me a bigger stop. Thinner traded clouds give me shorter stops. Okay. So do I want the best signals? I might not get a good signal for a long time. You know, if I'm a breakout trader here in Bank of America, this is the only signal I got in probably 4 months. That's fine. Maybe you're just going to have to live with that, right? But, you know, I personally want breakout trades, okay? I don't like to put on that many trades. I'm trying to find the best possible setups all day long, okay? I'm trying to put on the best possible setups all day long. My goal is not to make the most amount of trades possible, to make the most amount of money possible, okay? So chemo is known as a cloud, as we just kind of talked about here. The thicker the cloud, the better the setup. The thinner the cloud, the worse the setup, but it's going to give me more signals. Okay, so let me see if I could go in here. There was one today in, I think, Facebook on the 5-minute bar. So let me bring up Facebook on the 5. And so Facebook, you can see here on the 5-minute bar, This was not a good trading day for Facebook. Very, very thinly traded cloud. Look at how thin that cloud is, okay? It's maybe about 20 cents wide. Here it's even thinner, okay? So broke the cloud to the upside. You're going to get long, stop under the low. What happened? Went lower. Let's say you get shorted here, stop above the high. Trap, trap, okay? Trap here, trap there. Continue making traps, okay? So it's going to give me a lot of signals. However, it's going to give me, not many good setups. More trades, worse trades, okay? So I like thicker traded clouds. I think we saw one in, let me look at Apple today on the 5. Let me see the thickness of the cloud. Not really. This was really thin here. It's pretty thin here. Let me look at, I'm trying to think of a stock that went up all day long. Let me look at Google real quick. That's not really a thick cloud. You know, thick cloud's like letter X on the daily. So this is a thick cloud right here. This is a thick cloud right here. So this is a thick cloud. And a stock gaps higher here. Okay. Then we have Kenku Span. Kenku Span is as today's price compared to 26 periods ago. So how does today's price look against 24 periods ago? Okay, as we can see here, they literally, you just backtrack it. Today's versus 26 periods ago. Okay, today's versus 26 periods ago. So we can see here, today it is trading way higher than 26 periods ago, which means it's great compared to the past. Okay, so it's great compared to the past. So very, very important, guys, to know what these mean and how they're important. Okay. So you say, AK, this is great so far. But we say, why should I use it, AK? You know, why should I use this? The cloud is my favorite indicator because it is forward-looking, unlike moving average, Fibonacci levels, and other popular technical analysis methods. The cloud takes into account more data than simple or exponential moving averages. This gives me clear levels of support and resistance for setting profit targets and stops. Okay. It gives me clear levels of support and resistance for profit targets and stop. The cloud, okay, another reason why I love the cloud, it can be used, okay, it can be used for any product. So if you guys only trade futures, great. If you only trade forex, great. Okay, it is really, really great for anything you use it for. Okay, so you can use it for futures. You can trade it for forex. We're going to teach you guys how to line up the time frames. Okay, every time frame should be very, very different though. Okay, if I'm trading futures as a day trade, I should use a 12-minute bar. And we'll talk about why that's important, so important here in a second. Okay, so what makes the cloud different? The cloud is the only indicator that is past and future looking. Averages are calculated in real time and plotted both current price and 26 periods in advance. The cloud is applicable for any security. The cloud is not widely used. That's why it works. In the United States is where I live. Everybody's looking at the same thing. If everybody looks at the same thing, which is a golden cross, probably it's not going to work. Simple and easy. You got to be looking at something else. In Japan, every single dealer desk uses this method, okay, which is the Ichimoku Kinkin Hoi. Okay. Cloud for options traders. I'm an options trader. Okay. The cloud for options trading. As options traders, we find the cloud to be one of the most useful indicators around. We apply the Ichimoku Cloud to all of our trading plans. Using the cloud steers me away from false signals and keeps me in the best potential setups. There are only a few examples of applications which can be beneficial to any trader regardless of their experience with technical analysis. Our cloud, the cloud, is one of the easiest indicators to read and apply a trading plan to. It's an excellent tool for traders of any skill level. If you guys are, if you're a basic beginner trader, intermediate trader, you trade forex, it works for every single one. I'm going to teach you guys the time frames that you have to use, but it does work for every single one. So the cloud for all traders. Whoa, we went back to that one. The cloud for day trading. I use the Ichimoku Cloud to day trade on the 5-minute bar. Apple, Baba, Facebook, Tesla, Twitter. Okay. I use it to swing trade options. If you're looking to swing trade, the daily chart works best. If you're trading forex, 4-hour bar. Longer term trader, you can use a weekly chart. If you have a time frame, maybe 6 months out, you can use the weekly chart as well. So just understand that, guys, it's really important. Okay? As you can use it for any product out there. So this is really great for anybody out there. So let's talk about time periods, because it's really important to line up your time period. If you're day trading stocks, you want to trade the stocks that move a lot. I will repeat the names that I use: Apple, Baba, Facebook, Tesla. If you're swing trading stocks, you can use the daily chart. If you're day trading futures, NASDAQ, S&P, Qs, 12-minute bar. If you're trading currencies, currency options, I would use a 4-hour bar. Oil, gold, work best on a 5-minute bar. I didn't see oil today. Let me look at oil on a 5. So oil on a 5-minute bar. Just see how it's set up today. So here's your signal in oil here on the 5-minute bar, guys. So oil broke, had the number, broke to the downside. Breakout trader would have shorted $50. Stop at 50.40. Boom. You would have got that 30 cents to the downside. Okay. You would have probably waited for the oil number to come out, which is right here. So that worked on the 5-minute bar. Gold, 5-minute bar if you're day trading. Swing trading, you can use the daily chart. So let me repeat this, guys. If you're day trading stocks, 5-minute bar. If you're swing trading stocks, daily chart. If you're swing trading futures, daily chart. If you're day trading futures, 12-minute bar. Forex, 4-hour bar. Okay, Forex, 4-hour bar. Treasury futures as well. If you happen to be trading Treasury futures, you want to trade on a 12-minute bar as well. Okay. So direction and slope of the trend. The slope and thickness of the cloud can help indicate the strength of the trend. An upward trending stock with an upward sloping cloud in the future is considered to be a stronger trend than a stock with a flat or downward sloping cloud. Here we see Bank of America. Okay? So just a very, very strong chart. Cloud is just from the bottom left to the top right. Anything that's teaching us technical analysis has showed us this is the way that you want to trade. Okay, you want bottom left to the top right. Simple and easy. Here is an example of USO. So in general, we say the thicker the cloud, the more difficult to sustain break-ins. Okay. When I look at the past here in USO, okay, Ichimoku Kinkenhoi works best for trending markets. Okay. As we can see here, this is trading range. Okay. Every time it gets to that level, it gets bought. Every time it gets here, it's sold. This is just one big trend. Okay. This is not trading range. Okay, let me try green here. I've never done green before. This is just trading range. Okay, trading range, buy low, sell high. Pretty simple and easy, okay? We want trending markets. We go to Bank of America, okay? No, it's just straight, literally straight higher, okay? It might have been in a trading range, but then it broke out through in the trading range, and then it moved straight higher, okay? And the slope of the cloud helps us know that. Here, and we go to USO, literally just stuck in this range for months and months and months on that. Okay. So you can use this for any single security. We kind of talked about it. Using the cloud, oops, go back. Using the cloud, we can quickly determine if a security is bullish or bearish. We can identify support and resistance levels, determine the likeliness of a breakout, and determine the risk to reward setup of a trade. Okay, good traders always think about how much money they can make. I consider myself a great trader. I say, if I'm wrong, how much can I lose? So what I'm always looking at here is how much I can potentially lose on a trade. How much I can potentially lose on a trade. Okay, so I always want to know how much I can potentially lose on a trade. So debates surrounding Ichimoku Cloud. Since the cloud originated in Japan, there is very little literature pertaining to the use of it because it's translated from Japanese to English. There's a lot of debates going on. Some of the factors over the debate is the importance of the cloud thickness, which line is forming in the top or the bottom of the cloud, the space between current price and the cloud, and importance of lagging indicators or different moving periods. Our views on how to use the cloud are formed from practical experience and a lot of real-world testing. We believe that we can use the cloud in the best possible application for our trading plan. As you can see in our last example, the cloud can be a great tool for quick analysis of any security. The cloud can be used when a trader needs to quickly analyze many charts in a short period of time. You know, we'll go in here and just look real quick at 4 charts, and I'm just going to pull up random charts. I'm technically actually short Google right now. So let me bring up Google. So Google. So Google here, still under the cloud here. So this is still technically bearish. A very, very strong day today. You know, a trader could look to short Google today with the stop in the cloud. I still think Google is lower, and I am short it. Everybody always loves Facebook, so let's look at Facebook here. Facebook, S&P was up 30 points, and Facebook was up 64 cents. So I continue to think all these Momo names are going to get sold into year end. Aggressive seller can sell Facebook today with a stop above 124. So I was looking for an opportunity to short it. It hit the 9-period moving average today. So I could short it here, the stop above 124. Let's look at price line today. And then let's look at the S&P today. The S&P will be a good one. Price line is above the cloud. I talked about buying a price line to my subscribers right here at 1475. The breakout of the cloud, you would have had a stop at about 1375. Would have got you $125 to the upside. And then S&P, you know, the obvious one, just exploding today, taking out new all-time highs. Look at how small these candlesticks are every single day. And then today, I think it just was a massive short squeeze. It's interesting to see the VIX up with the market up so much. So it just broke to the upside here. So an aggressive pullback trader can buy any 9-period moving average with a stop under the 26. And a mild pullback trader can buy the 26. And a breakout trader would have bought the close the day that Trump got elected. Okay. So there's a setup for every single trader, depending on what kind of trader you are. Summary. The Ichimoku Cloud is a technical analysis method that uses forward-looking moving averages to help traders identify at a single glance if a security is in a bullish or bearish territory. The cloud is made up of 6 key components. The cloud works best in trending markets. The cloud will not produce good signals in markets that are in periods of consolidation or sideways action. The cloud will work best on different time scales depending on a security. Faster time scales will produce more traps in some assets while providing good signals in others. The cloud is best used as an indicator of key zones of support and resistance. The slope and thickness of the cloud can help indicate the strength of the trend. And it's easy to use. Stock, ETFs, futures, forex, day trading, swing trading. You know, a lot of presentations I do and I'll be doing going forward only talk about unusual option activity. Only talk about using options and options in the market, okay? But this works for anything. Any trader can use this to hopefully potentially make more money. So what we have for you guys today, and Mauricio, I don't know, I can put the link in here too. It is alphashark.com, okay? We're doing a special promotion today for FX, for thanking you having me in the webinar today. You get 6 strategies, okay, for trading the Ichimoku Cloud. This is a course that is on demand, okay? The course is $497. I can actually show you the course on our website, and we never change the prices on our website. So if you go here, you go to products, and you go to courses, workshop recordings. So this is it. So 6 setups trading the Ichimoku Cloud. It is $497 on our website, and we're offering it to you guys for a reduced price. Let's talk about what we have here, okay? You'll learn in this 3-hour boot camp using the cloud to trade stocks and options. Identify the best cloud setups for profitable trades. Strategies for day trading, swing trading, and longer-term trades. 6 of the best strategies using the cloud, okay? We're selling it usually for $499. We're going to give you guys a special promotion for watching this webinar for only $99. What we're also going to throw in is we're going to throw in a bonus. You get 1 month access to our real-time stock swing trade alerts. We will send it up to international customers as well. So you'll get that via text or the WhatsApp group, depending if you're international or domestic. So you get this all, guys. Okay, thank you. You get this all for 99 bucks. Okay, so make sure you sign up. We used to do money back guarantee, but to be honest, we don't need to anymore. Okay, so once you purchase it, you can watch the boot camp. Boot camp's about 3 hours long, plus about 4 hours of watching me trade. So it's about 7 hours total. Plus, we're throwing in 1 month of our stock swing trade alert service. That is a $99 value alone. And you can get this all today for only 99 bucks. We have limited amounts of spots, so make sure you sign up at alphashark.com/FX webinar. alphashark.com/FX webinar. A complete boot camp, 3 hours of the boot camp, 4 hours of watching me trade live, plus a month of trade alerts for 99 bucks. If you guys are serious about your education and learning, sign up, because if you cannot afford $99, you should not be trading. That is all for me. Everybody have a great night. Make sure you sign up at alphashark.com/FX webinar.